Hello, everybody. Welcome to another great webinar from the team at Reuters Events Insurance. I'm Brian Falchuk. I'm your moderator today, and we are talking about the perfect storm. It's what we've all been living for the past couple of years, but it continues to rage and seems like we're only adding to it. This is a time of lots of different crises and things that are being thrown at us that we have to navigate through, especially in claims. And it's an area where you don't get to just say, hang on, we'll just wait. We'll wait till this is over. You have to handle these things. And, that's despite all of this disruptive forces, all the challenges that we're facing, whether it's rapid inflation, the highest we've seen in 40 years already, the Great Resignation that everyone is talking about. I think that's largely starting to hit people. And of course, all the supply chain issues. I don't care what sector you're in, what line of business, supply chain is affecting us directly and indirectly, whether it's lengthening the time it takes to get things handled. Maybe it's even just the supply of service people, or the costs of getting those things handled, the inputs into those things, or both. And the supply of money likely to be more expensive in the next couple of days, depending on what happens at the FMOC meeting that's going on this week. But the reality is, it's a lot, and we're getting this constant news cycle of it all the time. But it's nothing new to us, especially in this industry. We are used to dealing with different crises and curveballs being thrown at us constantly. The question is, how do we deal with that? And especially the mix of them that we have going on right now. And that's what we're here to talk about today. How do we deal with this and prepare for the next one, so we're not feeling like everything is an unexpected black swan event, which it sort of feels like quite often. But if history's shown us anything about this industry, it's that we're resilient and we don't stop. And that is the basis for today's conversation. And I'm joined by a great panel. We have Sue Unvarsky, who's the VP and head of US Life Claims for Prudential Financial. We have Gwen Olsen, who's the AVP of Enterprise Claims Strategy and American Family. We have Charlie Wendland, who's the head of claims for Branch Insurance, and Bill Brower, who's the VP and head of US Auto Claims Strategy at LexisNexis Risk Solutions. As I said, I'm Brian Falchuk. I'm the managing partner of Insurance Evolution Partners and the author of the book series, The Future of Insurance. And I'm curious about what all these folks think about the future of insurance as we look at the challenges we face. The good news is we're going to have some comments from everyone here, but then we're opening it up for all of your questions. So please be sure to hit that Q&A button on the bottom of your Zoom screen and ask away. You don't have to wait till the Q&A section of the discussion. You can start asking as soon as someone inspires that question. You throw it in the Q&A. I will be monitoring that nonstop, and we'll make sure we have a really rich conversation from everybody here today. So with that, I want to get out of the way and leave room for our panelists to share some opening thoughts on how they view this perfect storm that we're all facing and how we set ourselves up to weather the next one. Sue, if you don't mind, I'd love to start with you with your perspective, the lone representative from the life insurance sector, but love to get your opening thoughts here.
Thanks, Brian. And by the way, you're never in the way, but thank you for the handoff. Hi, everyone. As Brian had mentioned, I'm Sue Unvarsky. I'm the Chief Claims Officer for Prudential, and we spend the majority of our day, myself and my teams, fulfilling those ultimate promises that we made to customers and policyholders and their beneficiaries when they first purchased the product or the service from us. And as Brian is alluding to, and as all of you know, this perfect storm, whether it's the pandemic or the resulting follow-up downstream effect, the war on talent, some of the challenges with the US mail system, the supply chain challenges, whatever else, there's dozens of things that we can go on about. This situation, and acknowledge, Brian, fully that we've all dealt with crises in the past, not the least of which was the horrible attacks on our country on September 11th. But this was very different than anything we've seen in the past. The snowball effect and the downstream effect of a worldwide pandemic brought about situations that many of us could have never imagined we'd see in our lifetime. And again, I'm not telling you anything you don't know already as it relates to that, but here's how I'll set up my opening comments. Being an operations executive and spending a little bit more than half of my career running some form of operation, I always think of things in terms of people, process, and technology. And we went from taking for granted that our technology works primarily in the office, and for a small portion of individuals who work from home and remotely on a certain period of time, or that self-servicing functionality was there only for those that prefer to use it, to relying more heavily on making sure that our technology works in all different situations across the world, at home, extremely at home, where most everyone is at home, as well as we're heading back into the offices, a hybrid mix of situations where someone could spend part of their day in an office in a normal work environment, and another part of their day either at home or at a Starbucks actually finishing up their work. So the flexibility in supporting access to our technology, whether it's internal talent that we utilize as employees, whether it's advisors that we support, or whether it's our customers themselves, have us looking at and doing things much differently than we had before. From a process perspective, I'll be very specific in this regard. We had to change the way we did business. The best example and the most relevant example I can give you is one of the other downstream effects of a global pandemic is that many of our state and federal local offices were closed and were experiencing the same challenges we had, getting their employees, getting their resources up and running in a 100% work from home environment. What that meant for the life insurance industry is waiting for a copy of a death certificate that typically took 2 weeks, maybe 3 weeks on the long end, became a 2, a 3, a 4-month process. And we did not want that to impact our customers, knowing that they most likely, the vast majority of them, needed these funds quickly. So we changed our processes to remove the burden from our customers and get the information that we needed to do our due diligence from other sources. And then lastly, the ever important lever of people. As Brian alluded to, the war on talent has made us look at how we support, how flexible we are, and how we value the resources that are most important to us, those on the front lines, and supporting the front lines, delivering service to our customers. Flexibility is key. It is the primary word, whether somebody is working from home alone and dealing with the loneliness that the pandemic brought, whether somebody has small children who need care, whether somebody has teenagers who are also pulling on that internet, or whether somebody's taking care of an elderly parent. And then the resulting change of it's a new world. Many people, more than ever before, are considering career changes as a result of what we've all just experienced. And the war on talent is real. People are poaching our resources every single day. You combine all those forces, and the way we look at rewarding and recognizing and engaging our talent is completely different than it's ever been before. So I'll stop there, Brian, and hand it back to you.
Yeah, Sue, I mean, you and I have gotten to talk about some of these things in particular. I think you use some of this up so well as both a taking for granted for a lot of what we had before and the way things were, and then this need to relook at really everything. And what I'm struck by is, you know, I have that relook conversation with folks at some carriers, and it's sort of just, well, yes, but this is what we have to deal with. But your point is a good one, is relook at what your customer is going through, or what their loved ones who they were trying to protect are going through. And we just have to deal with this, you know, or the government is doing this, or we can't get the parts. That's not what they care about. They're living through something very difficult. And so being willing to relook at those rules that have constrained us in the past and say, is there another way we can do this because someone's in need, I think is a critical reminder. That flexibility. Great points. Thank you for those remarks, Sue. Gwen, I'm going to turn to you next, if you don't mind, and a little bit of a shift in perspective from the P&C to auto claims side, or claims more broadly in P&C, but love to hear your thoughts from American Family.
Sure. Thanks, Brian. So hello, everyone. My name is Gwen Olsen. I lead the strategy team at American Family Insurance Claims Services, also known as AFIX. We provide claim services to all of the operating companies owned by American Family Insurance Holding Company. So that includes the General, Homesite, Main Street America, Connect Auto and Home, which was previously Ameriprise Auto and Home, and the American Family brand. I'm really excited to speak with you all today on the topic of market disruptors affecting claims and customer experience, particularly because it's the primary goal of my department to position our company for the future, to best prepare us for what's ahead, both the good and the bad, which means we think about this and we talk about this a lot. And our focus is always on the customer perspective. In fact, we've developed a new program that we call Future Tuesdays, which is headed by our strategy design director, who's a certified foresight practitioner. Every week, she introduces the group to tactics in her toolkit, and together we work through the process of preparing affix for any possible future that unfolds. A little bit more on this process. First, we work to understand the world in its current state. So this means extensive research across not just the insurance industry, but all industries, accounting for the entire ecosystem in which our current and our future customers live and work. This can be everything from the latest and greatest technology to politics, to fashion trends, to communication and consumer engagement preferences. This is all relevant data to feed our future building strategies and identify major areas for disruption. Now, I know you're thinking, what does fashion really have to do with P&C insurance? Well, our most recent Future Tuesday cohort just wrapped up on supply chain focused curriculum, examining the complex and broken supply chain system that effectively buckled under the stress of the pandemic. Through the supply chain lens, the group concluded that advancing technologies, manufacturing in particular, surfaced with the strongest potential to disrupt how and where we obtain parts and products, specifically additive manufacturing or 3D printing, which can be used for fashion and customized car parts alike, stood out as having the most profound disruption power. Changes in manufacturing as well as adjacent industries will inevitably cascade through the supply chain to our customers and to our company. Knowing this, we're now able to move forward in articulating major untapped opportunity areas for affix. Manufacturing wasn't the only avenue that we've explored through this focal topic. We also dove into inflation, given that inflation, which was previously mentioned, hit a 40-year high in 2022 and was driven by the pandemic. It goes hand in hand with supply chain complications. Efforts by businesses to deal with supply chain issues and the shortages have increased the costs that we're all noticing on our receipts. Yet sales indicate that consumer demand, the sheer volume of stuff that Americans are buying, has been growing. Despite inflation causing a surge in pricing for food, cars, construction materials, rent, and medical care, people are not deterred from shopping. We found it fascinating, this continued high demand despite high price points, and considering that more people are feeling inclined to leave their money-making jobs. Research points to the fact that money that otherwise would have been spent on things like vacations, dining, and fun experiences was instead being spent on material items. So it'll be interesting to see how that changes now that mask mandates are being lifted and more places are opening back up. The expectation is that current inflation levels will continue, but level out within 5 years. Experts have also been preparing for the possibility of stagflation. This means consumers purchase fewer goods and service due to the increased cost and the supply limits. At the same time, the labor market is shrinking. More people are leaving their jobs. At Affix, we're currently working on 2 efforts to address this. First, we're working closely with employees to get to the root of our purpose as a company, the essence of what drives them on a daily basis. We are using this feedback to develop appropriate recruiting measures, job training, and performance reviews. We've learned that empathy, compassion, and active listening are of critical importance for the customer claims experience and also the elements of their work that give our employees a heightened sense of purpose. We're seeking to infuse this into everything we do and plan for, including the technology we build and the digital experiences that we design. We're also working to revamp our recruiting pipelines and expand our efforts in select cities in the United States. In fact, our next Future Tuesday cohort will focus on creative and inclusive workplace for neurodiverse individuals. We're committed to a diverse and inclusive environment and to providing growth opportunities for all of our employees. We look forward to designing systems and processes that allow everyone to have a meaningful and a productive experience. Advancements in manufacturing technology will also impact how our customers perceive value, introduce new threats to their lives, and fundamentally change what they expect as consumers. It's important for us to stay mindful of these psychological forces at play, a person's values, beliefs, challenges, goals, and behaviors. These are essential factors when designing experiences and building tools and technologies that are truly human and customer-centric. Not only do we strategically partner with the right players to provide data-driven insights, but we also organize workshops and collaborative sessions that allow us to talk to people, solicit honest dialogue and feedback, and gain new perspectives beyond our own. Good disruptive innovation is not produced from our own comfort zones. It's produced through expanding our mindsets. We cannot assume that the insurance we offered our parents' generation will resonate with our children's generation. We need to make sure we're tracking emerging trends and technologies as closely as we're tracking customer value and expectation shifts. This is the only way we can ensure we are prepared to mitigate the most significant risks our customers face today and those that they will face tomorrow. The world is changing, as are the forces that shape it, but there's no future devoid of risk. Customers will continue to find solace in the services that mitigate their risks and allow them to live their lives to a fuller extent. We believe every loss deserves support, and we acknowledge that support might even take on a new meaning in an unknown future. We don't have a crystal ball or a time machine, and we don't know for absolute certain what our customers will face in the future, but we use futures thinking and strategic foresight methodologies to build exclusive views of possible futures that add depth and resilience to the American family enterprise innovation efforts. Thanks for the opportunity to be part of the panel today. I'll turn it back to Brian to continue with the opening remarks.
Thank you, Gwen. When you mentioned additive manufacturing or 3D printing, as a car guy, I get very excited because that's something that actually the car world struggles with, is not just right now getting parts, but eventually parts go out of manufacture for every car that's ever made. And this could allow us to put people's cars back on the road where we might have had to total it before simply because there was no way to fix it previously. So it's a really interesting idea, aside from inventory control and not having to ship things, and could be a really, really neat idea, and start to think about that more broadly. Homeowners repairs, renters repairs, etc., commercial properties, a lot of interesting things brewing right now with 3D printing. I know you talked about a lot more, but that's just one nugget of possibility from something we haven't fully grasped yet. So really interesting one. Charlie, I'd love to get some thoughts from you from Branch. It's still PNC, but different perspective, being a startup and looking at things perhaps a bit differently.
Yeah, thanks, Brian. Hi, everyone. Charlie Wendland. I'm the head of claims for Branch. As Brian said, we are a startup personal lines carrier headquartered in Columbus. And, the two things that are really keeping us up at night are, well, two of the things we're going to be talking about today, which is the first is the supply chain disruption and inflation, which is manifesting itself in auto severities being up by sometime 10 to 15 points across the board. And then, the war for talent as we are rapidly scaling our claims organization. I'll talk first about the auto severities. The average backlog nationwide right now, just cars waiting to get repaired, is 4.5 weeks. And so, it's due to obviously parts availability, but other things that are driving the severity are the cost of labor, obviously the cost of goods. Brian, the one thing you mentioned about part availability, there's some hopeful, there's legislation pending right now with the right to repair bill, as well as the SMART Act, that could help make parts more available, particularly aftermarket parts. But we're not super reliant upon that. So the way that we're approaching this is, what can we focus on? What's in our control and what's not in our control? So it's giving us a renewed approach on all of our internal processes, right? And when we think of it that way, what's in our control, what's out of our control, it seems like more and more things are becoming outside of our control, which is a little disheartening as a claims organization. And so that's just the one piece of it. The other piece, as I mentioned, as we are a startup, we're rapidly scaling our claims organization, and we're uniquely positioned in that we are natively remote, which is to say we came out of the box, everyone working from home. We're also not saddled with legacy processes and systems where we can be a little bit more nimble on how we think of things and allows us to pivot much more quickly. But that said, we still need to hire a bunch of people in a hurry, and so it's hard right now. But I think we're doing a fairly good job. But that when we talk about future issues, where we see this going, as more and more people work from home, we become more disconnected, whether or not we want to admit it, right? Like we are doing a bad job, I think, as an industry of recreating that informal collaboration of, Bill, you and I are in a meeting, and then I catch you afterwards to say, hey, that's an interesting thing you said. Let's go to lunch and let's talk about it more, right? Like that just doesn't happen. And we're fooling ourselves if we think it is, because we're just creating more formality around that. And so how can we, as we're rapidly scaling our organization and we're bringing newer people into claims, how can we give them that support that used to be there in the form of leaning over into the cube next to you to say, hey, I got this really interesting problem. I don't want to talk to my supervisor. What do you think about this? Like, does that happen through Slack or a medium like that? It's an answer that we're still trying to solve right now. So all that said, two of the biggest things that I'm talking about just so happened that, you asked me to serve on this panel, and happy to be here.
I think these are, this point of honesty is a really critical one, because we talk about the great things that we're doing remotely. And while that's true, there are things that we lose. And being at a startup, a lot of people presume, well, startups are digital first and they've got all these remote collaboration tools anyway. Yes, and startups also very much thrive on that openness and bumping into each other and the fun that comes. And when you're growing that fast, being able to come together as a team and feel cohesive. I'm amazed talking to a number of startup carriers, how they've navigated adding 200 people, which, to a large company may not sound like a lot, but to a 50 or 100 person company, that's incredible. Add 200 people over the course of the pandemic or in the past year. That's wild. Or, Gwen, your point with AmFam, that you just brought a number of organizations, not just into AmFam as a company through acquisition and growth over the years, but then for claims, organizing everyone into one big happy claims family, and doing that remotely, and not being able to pull people together. These are genuine challenges.
And how do you continue to cultivate a productive culture, and one that it feels like you're included when you're also separated just by the nature of how we're working logistically? Yeah.
Well, and that's where the Q&A can come in. So as a nice hint to everyone who's watching, make sure you ask those questions. These are the things we need to talk about, because they are real things. And you and I have talked about this as well. It's not only P&C. We're all feeling this everywhere. And there's a lot of things people are hitting on that front line, providing claim service, that they can't just turn to their peer or quickly turn to them. You have to set up time to have that casual conversation. It's different. It's tricky. And we need to learn how to respond to that better and more easily. Bill, I want to finish with you before we go into the Q&A. I always like to have the folks who see across a number of carriers come last, because you get to sum everything up with your perspective, but you do see across a large number of carriers. You are seeing what we're all dealing with. You're helping deploy tools and data and information to navigate this. What are some of your thoughts about this storm that we're facing and how we set ourselves up for the future?
Thank you, Brian. It's great to be with you. Great to be with everyone today. What an interesting time. As you mentioned, I am a vice president at LexisNexis Risk Solutions, working on claim strategy here. But prior to that, I was in the industry for more than 30 years, working with some major carriers, including Liberty Mutual and Nationwide Insurance. So I've had the chance to see the space from the insurance carrier side, as well as, over the last few years from a supplier side. Quite frankly, the most interesting time that I have experienced in my entire career, and the most challenging time for the industry is, as our panelists have said, that there's just a wealth of things, a world of things going on that's really disrupting us. Obviously, not only COVID, but this inflation, which, I tell people is like kryptonite for insurance companies. I know when you're pricing insurance, you're not pricing for the type of inflation that we're seeing today. And that's got to be very difficult. It's the great resignation and turnover, and not just the fact that you've got turnover, but you're bringing people into this organization, maybe new people from outside the organization. How do you get them ramped up and trained and ready to be productive? And then, of course, the supply chain issue, as was mentioned. I saw a report from Enterprise recently that I remember when the average day for repair was around 11 days, and now the last report I saw was 17 days, and I think that was fourth quarter of last year. I'm expecting that maybe even longer when we look at first quarter this year. So tremendous challenges. I'll just throw one more out there, not that we don't have enough already, but I would say that consumer mindset, the consumer, I say that consumers are really have a digital first mindset today. They think digital first. We didn't have that before COVID. Before COVID, what I saw in the industry was insurance companies were trying to get carriers to try out this digital thing, maybe self-service, maybe photo estimating. But when COVID happened, we all had to sort of turn on a dime and learn to work and do the things that we needed to do digitally in all areas of life. And so one of the things that we found at LexisNexis Risk Solutions, we do these studies every couple of years. We call them the Future of Claims study. And the most recent one that we produced was last May. And so we were able to interview over 1,700 consumers. And when we did that, what we found is consumers are really focused on digital today. It was interesting that 62% of the consumers that we interviewed were very attracted to digital. And the top reason was because they could process a claim anytime, anywhere, sort of on their own terms, using their digital device, and not worrying about, whether someone's working or whether there's a wait, if I'm calling a call center. So that was pretty interesting. I'll just share a couple of other findings, and then I know we want to jump into questions. But the other thing I found very interesting was we sliced this report by looking at results by age group. So we took a look at the millennials and the Gen X's versus the baby boomers. And millennials and Gen X's were both very close in their percentages. Almost 50% of millennials and baby boomers preferred interacting digitally. Now that could be for first notice of loss, as well as photo estimating. AI estimating obviously has grown dramatically in the last couple of years. But even baby boomers, what was interesting, my group, I guess, the baby boomer group, even that group, over a third of those individuals really liked the digital concept for interacting on insurance and insurance claims. And 40% of that group liked the idea of the photo estimating. That really has been a big hit. I think photo estimating, AI estimating, I see that growing dramatically over the next few years. And then finally, but one of the things that we have heard from in that same study is that customers are talking to a lot of people. 89% of the people that we surveyed said they had more than one conversation to get their claim handled. And then there was like 76% of the people that we interviewed said they had to talk to more than one person. So what's happening is there's lots of handoffs. And so I would say the thing I would add to the challenges that I think we need to think about for the future is just what is the customer looking for? What's the customer expectation? And as they think more digital first, how can we, whether I talk about touchless claims a lot, whether you believe in the idea of a completely self-service claim or not, how do we take some of those touches out and make the whole process less, create less friction and make it simpler for the customer to interact with us, similar to the way they interact with other businesses. So I'll pause there, but definitely a time like no other in my career.
That's great points, Bill. And you're speaking to actually the first question that we've already had come in. And I'm curious about this one. I'll read it because that's the best way to have it come, because I think it was well written. But with all the talk about the digital claim experience, the question is, how are you ensuring the customer claim experience is connected to the rest of the digital and personal experiences? And so I want to start with you, because I think we can picture what a fully digital auto claim might look like, or a renter's claim, or something that's about a tangible asset. We can, very clearly show its worth and the current state of it. With life insurance, is that the same thing? There are legalities involved. It feels like the digital journey might just be a communication thing. What is that digital journey in life, and how does that fit with the rest of the customer experience outside of claims?
Yeah, great question, Brian, and great question, Terry. Thanks for posing that question. So this is a great example of where you need to really unpack the situation and peel it down as it relates to what part of the life claims journey is the customer experiencing at the time. So what we're finding in our own research, in our own surveys, and what the industry research, so I'll use LIMRA as an example, is telling us that when customers are purchasing life insurance, or when they're checking for the status of certain types of transactions, they are leaning heavily towards a digital, online, mobile, self-servicing experience. But when you unpack that a little bit more and you start to look at the end life stage, and for instance, where they're reporting the first notice of loss, which in this case is actually the death of a loved one, they are heavily leaning towards a human touch. They are comfortable getting digital with other parts of the process, but that initial interaction, they want the empathy involved in a human interaction. They want to be able to ask their questions with another human being on the other end of the phone. We're finding that the vast majority of the individuals that are contacting us in a life claim situation, regardless of what generation they're from, do not have a solid understanding of how life insurance products work. They want to talk to people about their specific questions. Once they're comfortable that there's actually a human being on the other end of the line, and once they build some trust with that human being, then they're much more comfortable interacting with us digitally.
And I'm just thinking they're usually not the customer, or maybe it's, a husband and wife or other couple who bought policies together, but typically it's not the main customer.
Well, it wouldn't be, right?
Yeah.
Because unfortunately, the person that purchased that policy is now deceased. So it's what we're finding is that about a third of the time, it's the beneficiary themselves. Another third of the time, it's a loved one of the beneficiary. So it could be an elderly spouse that's the beneficiary, and a child or a grandchild is calling in. And then another third of the time, it could be a financial advisor or other professional that's providing some support. So, and that gives you a great example as well as how you have to adjust to who's making that first call.
Yeah.
And how your level of empathy and your ability to manage the specific of the situation needs to change.
Yeah. The tools that each of them would want to use, the pathway that they're looking for, are going to be wildly different. I mean, on the P&C side, it's like dealing with a public adjuster, an attorney, you're insured as the claimant, or a third party as each of those is extremely different. The way you're going to interact with them is going to be so different. Charlie, you're nodding, so I'm going to go to you next, but I'm curious about how you're looking at this, because as a company, you are thinking very holistically about that interaction. Does that change when things get to claims? How do you think about the way your choices are tied to those on the underwriting side or the service side or what have you?
Yeah, Branch's unique selling proposition is that you can bundle your home and auto by answering 2 questions, right? And you can do that all online, within less than a minute if you so choose, right? And so what we need to do on the claim side is try to replicate that experience, because it would be a shame if it's the same old. And so, we have electronic first notice of loss, we have virtual estimating, all these types of things. But the way we think about implementing tech in the claims process is to relieve our claims staff of traditional administrative tasks so they can spend more time on complex issues in servicing the customer. I think, And this may be confirmation bias, my own confirmation bias, but I've always been a little dubious of the straight through processing or the touchless claims. I still think that claims is driven by relationships and building that rapport, whether it's the insured or the claimant from the onset. I just think it makes for a better experience and a shorter claims cycle. And so that's how we think about implementing that technology in the process. It's to help the adjuster rather than replace them.
Gwen, is that your take as well?
Yeah, very similar thoughts to what Charlie mentioned. I think one thing I would point out is, as part of the American Family Enterprise, we're providing claim services to companies with a variety of distribution channels and support models. So for us, we want to focus on broad adoption, but it's somewhat secondary to really the breadth of the options that we provide to customers. So we want our digital claim services to really be designed to facilitate customer preference. So we want the customers to enter and exit that digital claims experience when and where they please. But we also want to feel as if we know that customer before they've had a claim. We feel that it's up to us to know the customer and help provide the options and the flexibility to them, because most of our customers are having a claim for the first time, even if they're a very long time customer. And so having that flexibility and giving that choice is really paramount to make sure that we have that cohesion and that brand still resonates through the claims experience. So it isn't an affix brand coming through, but it is the unique brand in which they chose to engage and purchase insurance.
Yeah, if you don't mind, Brian, if I could jump in. Gwen, I know AmFam has done some incredible work in terms of creating text capability for your clients too. I think that's pretty interesting how you have created that channel for customers who would like to interact with you in more of a digital fashion.
Yeah, we're all looking for those new avenues. And I think, Gwen, your point on distribution, sometimes that creates a complication or another consideration. It's not just who you're dealing with. Is there another party that does or doesn't want you doing certain things or wants to be kept in the loop? And how are these tools helping or hurting with that, or stepping on toes, or what have you? Sue, back to your point on financial advisor, financial planner, life insurance agent, where are they in the mix in this? There's a lot of considerations. We're talking about knowing what all these different customers might want, or claimants, or beneficiaries, but there's other parties who also have interests in this as well. And we have to think about what tools are we deploying to take care of them. Bill, I'm going to start this one with you, but I'm going to combine two questions because I think they're intertwined. But one talks about this J.D. Power survey that shows that on-site self-serviced vehicle, photo estimatics satisfaction is lower than when an appraiser comes out and does their full work in the more traditional path. And of course, there's some people who have been through those experiences and love it and love the simplicity and are glad they didn't have to wait around, and others who it wasn't great, like anything. And there's someone else who's saying, it's not always clear what the right answer is. And certain kinds of claims or situations maybe are more complicated and need more empathy. And that could vary by the individual, even for the same claim situation. So any thoughts as you look around at different carriers on how do we figure out, how do we navigate that, make the right decision in that moment? If someone isn't telling us, thou shalt serve me this way because I care about these things, it's never spelled out that clearly.
Right. No, good question. Yes, I think what we're seeing and what we're hearing from customers is the hybrid approach is really the optimal approach, right? So, my kids, I have college age kids, they'd love to just interact completely digitally. They wouldn't really be concerned that they needed to talk to someone, but others would want to. And I think one of the things that I see is building more of a end-to-end solution that, like today and with AI, I'm hearing a lot of good things about photo estimating, but yes, there's some who have bad experiences, but I think part of it is just, how do you get there? Like sometimes you're having a couple of conversations and then you're doing digital and then you're going back to conversations. And it seems like it's sort of back and forth. I spoke at a conference a few days ago and sort of laid out a possible approach in the future. And I'll just give you kind of a high level. So what if we take advantage of some of the capabilities that are readily available today in other businesses, like the QR code. I really love the QR codes. I use them at restaurants and other places that I happen to go to, and I can get into my whatever the application is very easily. So what if Bill has an accident, Bill and Brian have an accident, and we're chatting afterwards, we're waiting on the police, nobody got hurt, cars are just on the side of the road, some damage, waiting on the police to do a report. What if I opened my glove box to get my insurance card? Obviously, I'm going to go grab my insurance card for the accident. What if there's a QR code there that says, if you have a claim, try this? Well, normally I probably wouldn't be thinking about using it, but I've got to wait a few minutes for the police, and I'm sort of curious now, right? So I hover over that QR code, and immediately it puts me into a very simple self-service claims report opportunity, right? It's not going to require me to type anything. Simply going to ask me to do things like take a picture of the license plate of my vehicle. I mean, once I click a button or two that says I'm reporting a claim, then I would take a picture of maybe the license plate of my vehicle, the other vehicle involved. And then from the license plate, companies like LexisNexis can provide all of the information on the vehicle and the insurance and the person and the contact and all that information. So you're not asking people all those questions and filling in screens. And then what if after that, you're able to get into screens that allow you to make a decision if you wanted to pick a direct repair shop, for example, to go ahead and pick a shop and schedule it. And all of this in 5 minutes, waiting on the police. That's the type of self-service that I think people are looking for, because that's what they experience sort of in other businesses. Now, to the point of the hybrid, I think what has to happen in any type of digital solution is you need those checkpoints. So let's just say I was curious, Brian and I had the accident, I hit the QR code. I've just, in just 3 or 4 minutes, I've actually started a claim. But now, you know, I want to talk to someone. All right, I have a button that I want to connect to the call center. I want to have a chat, or at the end of that process, I have a chance to rate that experience. If I don't rate it, 5 stars, somebody's going to call me. But one of the things that we hear a lot in the customer service surveys is that this beginning of the claim, when the claim's first being set up, the traditional process is that the customer calls, usually a call center for auto claim. They are asked a lot of questions, they answer those questions, and then a few hours later, someone who's the adjuster calls them back to have another conversation. They're different conversations, and we in the insurance industry know they're both very important. But what we're hearing from the customer perspective is it feels like they're repeating themselves a second time. So that's where I see technology. I think Sue said this well. Where can technology add value? Where do people add the greatest value? And so in my little example with Brian and I, if you had something that simple that a customer would be more likely to actually get the claim started, the report started from the accident scene. And then from there, they have one conversation with the claims adjuster who's already received information electronically about the parties, the vehicles, they know what happened. And then you can have maybe a more beneficial conversation to move that claim along. I think you've got to kind of look at it that way, but it really starts with mapping the claims process and then beginning to step back and say, where does workflow stop? Where is information missing that's causing this claim to slow down? And then when you do that mapping exercise and you begin to think about, is there technology, is there data that would fill this void? That's kind of how I think about how to design that sort of optimal model that gives you sort of the best of technology with the best of your people and your people showing empathy.
Yeah, it's a great way to talk through a real world hybrid, that hybrid story that you're talking about, Bill. I appreciate that. Gwen, are there things that you're seeing at AmFam as you think about, given that people are going to interpret it differently and they're in different situations and customer satisfaction may be different, how do you figure out the right solution for those different cases?
Yeah, I mean, I think that finding is definitely a broad statement, right? And it comes down to balance and flexibility. So we've had conversations around, just because we can automate something doesn't mean we should. If we're truly looking at it from a lens of customer value, then we need to make sure that we have options, and we give our customers choice to really find their own unique balance of digital speed and human support. And we're not necessarily looking to remove, field staff to handling property claims. Instead, we're looking to really drive value in other ways so that we can become more efficient. And as Charlie mentioned, take some of those administrative tasks that fall to our customers and our adjusters today, so that the field staff that we have really show up in those tough times, right? Thinking of the Colorado wildfires that we've had, the devastating wind and tornadoes. I mean, December in and of itself last year, I think really gave our teams the opportunity to just show up and show the value that face-to-face and that human interaction can provide. But that isn't necessary. We also know our customers are telling us that they have an appetite for digital for some of the more routine things. And so I think just finding that balance and having the flexibility within your teams to meet the customers where they are and address the situations that they're facing is really the utmost important thing.
Yeah. Charlie, any thoughts from you on this? Especially because you are trying to push things digitally, but also recognizing there's a very human nature to what you're doing.
Yeah, a lot. And, specific to the question, I think the reason why, and this may be anecdotal, right? But I read the same JD Power satisfaction study about this. I think part of the reason why we're not seeing the expected satisfactory with virtual estimating for auto as maybe we anticipated is because supplements are really high, right? Like you write that estimate, they're taking it to the shop says way too low, right? Because the desk appraiser is writing based on what they see, and it's exclusively reliant upon the photos, the quality of the photos that the user is capturing, right? Which can be various levels. I was brought up writing estimates where get it to the shop, get it torn down, get everything accounted for, get that mutually agreed price. That doesn't happen in this type of environment, right? And so I think that's probably contributing to the lower satisfaction with the photo estimating. I still like it though, as just a jump off point, but it's all about that expectation setting with the customer, right? To let them know like, hey, this is just an initial estimate, take it to your body shop, we'll work it out with them. So they're not surprised when they hear from their body shop, not enough, we're going to have a supplement, right? Because they don't understand the whole process. All they hear is not enough. And they think, oh, my insurance isn't covering this, right? And that's where that human touch comes in of proper expectation setting, to walk them through the process.
Yeah, no, my initial estimate came back higher than the body shop came back with, and I was hoping the car would get totaled, and it wasn't. So I was unhappy, but not with the virtual estimate. Sue, are there analogs in the life insurance claims process where we've got a digital tool, we're trying to use it, and we're finding that actually people are not satisfied with it? Or are there places where you've maybe pulled back or using the tools differently?
Yeah, so I'll say there's more of the latter, Brian, relative to the first, right? So what we're currently looking at is our digital intake tools that are on our website, particularly as it relates to a first notice of loss. We want to make sure that there's enough empathy if someone chooses to go that route versus make a phone call and actually speak to a human being. We want to make sure that we're describing the process. So back to the point that Charlie made, right? It's when you're managing expectations up front in the life insurance industry, 9 out of 10 customers want to understand the process. What do I need to do? What happens next? How long do I need to wait? In some cases, we're getting questions like, wow, this is a lot more money than I thought it was. Do you have a recommendation as to what I might want to do with some of these extra funds after I pay final expenses? So we're adjusting our online tools to try to anticipate the needs of any and every an individual that's coming to us, whether it is a financial advisor, whether it is the beneficiary that's going to receive the funds themselves, or whether it's someone just simply supporting that beneficiary as a family member. So we've got tools out there. We're finding the need to take a step back and rewrite some of the screens that are being seen for the first time by individuals and who are going through this process.
That's a really interesting point. It's showing you a need for a different tool or a different way for your staff to be responsive to a maybe new kinds of questions that you're getting all of a sudden. That's
Brian,
really,
Brian, I just add one thing on the photo estimating that I think is pretty interesting. It's like any new process. It takes a little while to get them tuned, but I think the AI capabilities that are really developing strong, and that's really going to help us. We're never going to be able to probably perfect AI to be perfectly aligned with what a person could do, but I do see that technology, that capability improving rapidly.
Yeah.
And I think carriers, there's a number of companies that have this type of capability. So it's really picking the partner that's really has the best product, but the best product today is not the best product tomorrow. So it has to be the company that's really continuing to invest to continue to make the solution better. And I think that I don't think we'll ever, just take pictures and write checks, but maybe for some small claims, customers could get their claims processed with an AI estimate without a person reviewing it at some point in the future. But it's interesting to see how far that technology has come, because it's really only been out there, a few years, 4 years, really. Yeah.
With the right cultivation, it will certainly continue to grow in its use. But I think you're right. There's always gonna be some limitation to it. For those who, I think everyone can see the questions, but someone's actually pasted in the JD Power results, which is quite interesting, but it's actually that SAT is quite high for people who started digital and stayed digital. But it's when they broke from digital and had to go, sort of, Charlie, it was the situation you said is, I started down this path, lo and behold, it wasn't good enough. And now there's more back and forth. Right. It is about expectations. Right. That's really what we're talking about, is you've set someone's expectations, and for, totally justifiable reasons, we haven't been able to meet that initial expectation of simple, digital, seamless, because there was a complication in it. And, that stuff happens. And that just, creates a frustration. So no question about that. We are tight on time, and I want to make sure we hit this one, because it's another one of the key points we've got here. And it's on the talent side. Charlie, I'm going to start with you, because I think your comments set this one up. But it's with a completely remote workforce. And that was certainly true for all of us at one point. Now it's a mix, or maybe it's by department or function or location or what have you. Certainly we're dealing with remote workforces. What tools and techniques have you found that helps with virtual onboarding and peer-to-peer learning? And I know everyone will have points on this. But yeah, Charlie, would you mind opening us up? Because I think you've certainly been living this with some pretty hefty percentage growth in your team.
Yeah, exponential. And the short answer is a funny one, is that we're bringing people together in person. so, for the initial onboarding, we think there's kind of cheating on your answer. Look, we're InsurTech, right? So, look, we're bringing people for onboarding. We think there's value in starting off on the right foot and to build that rapport in person, right? And so, to the extent we can, we're bringing people together for like an immersion week, right? Where we go over just high level, company initiatives, things about the job, doing some fun things together to set that foundation. So when we go totally virtual, we have a good foundation to work from. Not always going to be the case. And so we use tools like Zoom, like Slack to, stay in contact the best we can. But again, as I said at the onset, we're doing a bad job of creating that informal collaboration. Slack and tools like that are good to a certain extent, but when you try to, recreate that water cooler talk, you end up adding more formality, and as a result, it's a really inorganic conversation. And so I have yet to find a tool that does a good job, recreating that type of environment. But believe me when I say that we're looking for it. So the short answer is, we get people together at the onset for onboarding, but we have regular check-ins over Zoom, certainly cameras on to the extent that people are comfortable with that.
Well, it's reality, right? You can still try to get people together and do some more hybrid. Gwen, any thoughts from you? How have you navigated this? You've had a lot of changes in teams and structure, and needed to onboard even existing employees, right?
Yeah, so I don't know that we have the answer or the solution, so I'm hoping to learn from others here, but we're having some of those same conversations around just that pivotal foundational time when someone is a new hire, giving them that immersion experience is so important. And then we've talked that our teams have really demonstrated that they can get their day-to-day job done effectively in a remote environment. So that isn't something we call the question. And so we've talked about being intentional about bringing our folks back together, because similar to what Charlie's saying, like we just haven't been able to emulate. We use Zoom when we have team meetings or huddles. We are definitely lean towards a cameras on, just so we have a little bit more of a 2D face-to-face, but having that human interaction and just getting together for team building and meetings that are outside of the standard that we know we can do virtually. So just being intentional, I think, about the expense that you incur to bring everyone together now that our teams aren't located in proximity. Our hiring has definitely been far more disparate, which is fabulous and a great opportunity for us to be able to do, given the war on talent that's out there. But it does seem like getting back together in person kind of restores some of that livelihood and that team camaraderie that we haven't been able to emulate in the virtual environment.
Yeah, but I hear both of you saying you can do it and be strategic and thoughtful about when you bring people together, and there's still value in that. So finding ways to do it and do it in ways that people are comfortable with, but also giving the right tools and trust. Gwen, definitely a point I'd taken from you. You can trust that your people are able to do good work remotely, if you give them the right tools to do that with. Sue, thoughts from you? This is something you and I talked about in December, because Prudential has made some decisions around location for different roles, and something that you all have been navigating as well.
Yeah, I won't repeat because I'm completely aligned with what Gwen and Charlie said, Brian. We are not yet back into the office. We're just starting to go back in. So unfortunately, pulling people in right yet, it will be soon, but is not a possibility. But to Gwen's point, the office for claims functions is going to be more of a collaboration type of a setting in the future. And the majority of the business as usual work will continue to be done in a remote environment. I'm sure we faced a lot of the same challenges that Gwen and Charlie outlined. I'm sure that we will start using the office where we see situations where it'll make more sense to actually be in the same room, physically in person together, to accelerate learning opportunities. The tools are a little bit of a challenge, where it's harder to job shadow virtually than it is in person. But we've figured it out. We have hired thousands of people through the pandemic and have found that we're just as successful as we were pre-pandemic, albeit it's a little bit more difficult to bring people up to speed. With that being said, and I'll end on this note, diversity and inclusion is key. It's more important than it has ever been for our customers and for our employees. So we are also embarking on some very, very successful and hopeful neurodiversity efforts. And we're finding that as an example is actually going as well, if not better, in a virtual learning environment.
There's a purposefulness to what all of you are talking about, is how you use your different tools, venues, be they in person or remote. And so you're absolutely right, it's important to keep the DEI discussion front and center, because the context is different. And so you have access to lots of different people now, but is the way that you're engaging with them inherently creating opportunities or blocking opportunities? And so we need to keep that front and center to make sure we're navigating that effectively. But we have just a couple minutes left. So I'm going to end with you, but I will also say we have more questions coming in. So we could go another hour. We're not going to, but Bill, last minute or so, any closing thoughts from you?
Yeah, no, I think those are great points. I would just add mentoring. I think that's an opportunity in a virtual environment where maybe you have someone who has been a part of the culture for some time who could help, particularly new people as they're coming aboard. The other thing I'll end with is, I know I talk about data a lot, but data can really help for consistency. So I know not just virtual working from home, but the fact that we're not going out to meet customers as much and things like that. There's a lot of opportunity for fraudulent claims to get paid in error. And so there are data solutions that can help to sort of identify those, and even the person who's new can make the right decision and maybe flagging a claim that needs to be reviewed further. So, but great points, great discussion. What an exciting time to be in insurance claims. And Brian, thanks for the opportunity to participate in the panel today.
Excellent. Well, thank you, everyone. It's a tough conversation, and there's no single answer to anything we've discussed, as we've all pointed out. But there is, so you use the word flexibility. I think that is absolutely a crucial point everyone needs to take in from today. There's purposefulness, openness, mindfulness of customer, and I use that term really broadly because it could be our distribution partner, it could be a third-party claimant, it could be a financial advisor or other professional we're working with, an attorney. It could be so many different people. Our employees, in a sense, are our customers as well. So being mindful to what they're experiencing and what their needs are. And there's a comment applauding, so your point about neurodiversity, I think it came up earlier in the conversation as well, keeping these things front and center. Fantastic conversation. The questions kept coming in, which means this is not a done conversation. So I encourage everyone who attended to engage in this with your peers, bring it up at work. This recording will be available and sent to all the registrants. Use that, share it, and use it as a discussion point to dig in further, because we're not done. And this is not the last set of challenges we will face. So the more we engage in this, the better we will do going forward. Thank you to the panel and to everyone who attended. Great conversation today.
Thank you, Brian.
Thank you.